It's been a hot minute since I've seen everybody, and I know that everybody's looking for streams at the moment. But at the moment, crypto is just in that place. It's in that place where it's becoming boring and tight, and it's consolidating, and there's no big moves, and there's no volatility, and everybody's wondering: is Bitcoin gonna go up? Is Bitcoin gonna go down? Is the market gonna come back? Do we have any sort of do we have any recipes for another bull market? What are we going to do to get this market going? Now, what I've been doing over the last couple of weeks is I've been bringing on special guests, right? People that operate in the same space, people that have two eyes, just like myself, just like all of you, that are looking at the same market that we're all looking at. And my objective over the last couple of weeks, anyway, has been to try and identify whether or not we are on the right track. Okay. Now, we've had some pretty respectable guests come on the show, and they've spoken to us about some pretty serious things. And the current gauge that we're getting from all these guests is that, well, number one, there probably will be a bull market based on what we're currently seeing. We are in the heart of the bear market, which we already know anyway. All right. And today's special guest is another good guest because, again, we've got somebody that focuses more on the macro side of things as opposed to the pure TA. Now, we know that TA is golden, right? We know that TA is crucial. It's something that we use to really try and gauge which direction price is going in. But often be the case that when you're looking at extended periods of time, you don't really know the amount of patience that's required makes you need to understand macro and more fundamental type of analysis in order to give you that patience that will allow you to wait the 1, 2, 3 years as opposed to the 15-minute time frame. So I've got Ted on today. All right, Ted's taken an hour of his time to come on the show and say hi to everyone. So get your comments in. Make sure you guys are saying good things. Make sure you're giving Ted a good shout out, and let's get him on the stream to talk about Bitcoin, to talk about the market, to talk about these sort of global factors around it, and what we might need to get into that next bull market. So without further ado, Ted, how are you doing, my bro?
Good, NJ. How are you, mate? It's good to see you. It's been a little while since we've been following each other on Twitter, and it's nice to finally have a stream with you. So I appreciate you having me on.
Oh, thank you very much, Ted. Thank you very much. It's really, really, really good to have you on the stream. So for everybody in the chat, this is Ted. Ted, this is everybody in the chat. We've got a really lovely community here. Small community, but building, building, building. We are growing. Really, really good people. All focused on cryptocurrency, all focused on the betterment of Bitcoin, the betterment of crypto as an industry in general. And I'm sure that they're all excited to meet you today to get some of your thoughts as to what's going on with the market currently, where we sit, and where we might be going in the near to mid future. You know. So tell us a
Yeah,
little bit about yourself, Ted. Where do you come from? And maybe tell them how we met, even if you'd like to.
yeah, sure. So I've been in financial markets for about close to a decade now. So I started trading penny stocks fresh out of high school. Um, Being in Australia, I was up awake at about midnight, and I'd wait for the US Open. Obviously, being on the other side of the world, so their daytime was our nighttime, and I'd be trading penny stocks, and I got into the markets that way. So I think I made about $1,000 in my first week on like a $2,000 account of something degenerate like that. And yeah, it's quickly after a few weeks, following a few courses, doing the traditional, get into the markets, follow a paid group leader, and learn that way. I ended up losing that money that I made and the initial capital. So that was where I started at about the age of 18, and then just kind of saw the potential of what could come if I was just doing this on the side and actually educating myself and building. I was 18, so I didn't know anything about anything at that point. And at the same time, I was doing university and getting my engineering degree. So there was a couple of years where I was moved into the Forex market from penny stocks because that was just not sustainable, staying up at nights and chasing the pump and dumps that you see in penny stocks, which was quite ridiculous now that I look back on it. But I guess it's not too dissimilar to what some people do in crypto now. moving towards Forex, and that was more time friendly. I could trade that during the Asian hours, and getting involved in technical analysis, and then going down the path eventually after about 5 years of learning how the market actually moved, learning about the intercorrelation between the bond market, currency markets, equity markets, trading news, learning about monetary policy, and all of that over the course of about the last 10 years has led me to only the last 2 years get into crypto and apply that knowledge to crypto. And it's been quite elegant and nice, really, to see how my knowledge of currency markets and traditional markets is now playing out in crypto. As you see the space grow, and you see institutional money and smart money join crypto, which we've now found out may not be so smart. But the correlations are quite nice to trade when the market has a little bit more volatility and has less crypto native drama around, which we saw up until about May this year. When
Okay,
macro was really driving crypto.
I'd
So that's
like to ask
me.
you a question. So
Yeah,
I like to hit hard and fast on this show
sure.
because you know, I imagine myself as one of the people in the audience, and yes, I know that everybody wants to ask you questions, and everybody's going to want to know more about your background. But for those of you listening, I'm going to ask Ted right now, and I'm going to ask him straight away. I'm not messing about. Ted, is it over, bro? Is Bitcoin going to zero now, and has the bubble popped, or are we going to get another bull cycle? A lot of people are wondering the same question. Are we going to get a lot of? Are we going to get a new bull cycle? What are your thoughts on that?
Look, I think if you go with the thesis that crypto is, yes, it has a use case. There are big use cases for crypto. You can argue about those till you drop dead, basically. But the thing is, the way that humans are evolving and have evolved is that we're not content, or at least our generation is not really content. I'm only 27, so our generation, I think, is not content with putting their money in an ETF and letting it grow for the next 60 years, especially when you've got inflation at 10%. So that inflationary narrative is in a way kind of bullish for things like crypto that can be a ticket to, out of that inflationary regime that we have right now, and to actually grow a portfolio rather than putting it in an ETF or something like that that's going to take you until retirement to see any kind of gains. And obviously, once you get to retirement, life's almost over, and you spent the last 50 years of your life slaving away doing something you don't like. So there's always that mystique and people looking towards some higher beta growth that they can allocate money to. And most people go too far on that, as we've seen, and they degen their savings away. But for those people that are looking for an allocation, maybe only 20-30% of their portfolio, and have the rest in traditional markets, crypto is probably going to start to take up more of that portfolio allocation, where you have that high beta allocation to your portfolio. So there's that use case for the everyday person. And the big thing at the moment is the trust around the crypto market, because we've had macro deteriorate, but that's starting to show signs that it's shifting at least towards a more neutral agenda. But at the same time, you've had crypto deteriorate in terms of trust, with the big institutions blowing up, FTX. If that didn't happen, you'd be saying that crypto is quite close to a bottom and might start to trend in the middle of 2023, and we might see quite a substantial leg higher. But that trust has to come back for me, and how that's going to come back, it's not so clear at the moment, because there's FUD circling around, even exchanges like Binance at the moment. I'm not saying anything is going on there, but we're seeing, it's just like a witch hunt at the moment. So until that kind of subsides and the trust comes back and the macro really moves towards a sign that inflation has topped and is coming lower, and there's open communication from central banks that they're pausing and moving towards a more accommodative stance, I don't think there'll be a substantial leg higher. So that could take anywhere from the end of next year to 2020, 2024, really. But it's just a matter of trust for the crypto market. I think that's the key point.
Fantastic. That's a fantastic response. And there are so many things that I want to ask based on that response, but I've got to make sure I limit myself in terms of, just because it's an exciting period. Um,
It is, yeah.
this is the part of the market for me personally where, a lot of the building is done. The numbers are slow. You don't make money. The growth is very slow. To round up people is not easy, and nobody really wants to learn about crypto in general. It's a wintertime sort of period for crypto.
It is, yeah.
Now, you mentioned that the traditional markets at the moment are are not really, the current status of the traditional markets have made the general community, fall out of love with crypto. There's no trust within crypto, and therefore that risk on environment doesn't seem appealing, well, as appealing as it was in 2021. Now,
Yeah.
if we was to get a risk on environment, maybe if we was to bottom out in mid 2023, say for instance we were to bottom out in 2023, how long would it take, would you say, in your opinion, for us to break out and go back into a risk on environment, a bull market per se for Bitcoin? Maybe we don't have to focus too much on altcoins and metals and other risk on pairs, but what would it take, how long would it take for us, once we've touched that bottom, for us to go back into that bull market, do you think, in your perspective?
Yeah. So if we take some kind of context from the previous bull market where it really started when COVID um, hit the mainstream. So what we had there was the fear of mass shutdowns, economic hardship, people losing their jobs, and negative GDP growth across the world. So that was the big fear point for what started the previous bull run. So the previous bull run was started as COVID, with a catalyst of COVID, and then central banks just started printing money to bail large institutions out, to market it as we're bailing the everyday person out. That we're keeping jobs, we're allowing companies to access cheap cash and keep their cash flow running and keep people in jobs and keep the world spinning, essentially. So with that, everyone took that as an advantage, as that cheap cash, and threw it into the highest beta plays that they could find. And what was that? That was crypto. So all of that money flowed out of the bond market. No one wanted to sit their money in bonds to earn 2-3%. They wanted massive returns with the free cash that they were getting. So they wanted to get as much money as they could with the money that they were getting basically for free. So that all went into crypto, went into yield farming, it went into the highest beta plays possible. You saw US equities, particularly tech stocks, high beta plays, those small cap, the high growth assets really went nuts. And all of that circled from those traditionally more risk free or less risky investments like the bond market, like gold and like silver, and all of these things that move quite slowly typically. And that went into the high beta plays. So that's what catalyzed the previous bull run. So that makes me question what is going to be the narrative for the next bull run. Is it going to be an unwind of all of the leverage that's been building up in the system on the short side? Big bearish bets in crypto. I think that's maybe not going to be the case. You could argue that could be the case in traditional markets. And how much of that correlates back into crypto, I'm not sure. But there needs to be some kind of narrative that forms the next bull run. It's not just going to be, okay, inflation's coming down, central banks are starting to pause. In that scenario, I think we just get sideways with market makers winning out like
Interesting.
we see right now.
Interesting. Do you think, though, for example, in the next year, if we do find a bottom, do you think that the the Bitcoin halving in 2024, do you think that could be a potential catalyst to get the crypto market back on its feet and to start? I feel like it's enough to definitely get some attention towards crypto, but is it enough of a catalyst to get Bitcoin to start pushing up to higher levels like 30,000, 43,000, 50,000, 69,000.
Yeah. Well, history is, what's the saying? History
Tends
doesn't
to repeat.
always repeat itself, but it often rhymes. So
Yeah, that's the one.
you've seen it. Every halving so far has been bullish, but every halving so far has existed in a monetary regime where global central banks are printing money and stimulating economies. You could argue that it was slightly off in 2018 when the Fed they hiked rates, but then quickly pulled back on that because they saw some signs of stress in the credit system. So that was one halving event so the halving in 2017, then slightly after you had the shift to more aggressive policy, but that was quickly undone, and they started to move back towards neutral stance and started to cut rates again. So ever since Bitcoin's existed, we've had loose monetary policy, particularly from the Federal Reserve, who is the largest liquidity provider in the world, and that's why they're so significant. So this time around, it'll be interesting to see. So 2024, are we going to have what we have now? Are we going to have a more neutral policy stance from them, or are we going to have a loose policy stance? So that will depend mostly on the data. So the data from here onwards, we're starting to see a little bit of a shift, like I mentioned earlier, but to tie it all together and to form a comprehensive narrative for people that are like, hey, I've done my ass in crypto, or I'm new to crypto, what the hell is this? For them for an overall very high view or macro narrative to take place, we want loose monetary policy, and the Bitcoin halvening would be a good start. But what else? That I think there might have to be something else just to regain that trust and to bring a whole bunch of new capital and have that capital that may have been sidelined or may have seen a total loss in the last 6 to 12 months. How do they get back into the market? And those two starting points are pretty good, but I think that doesn't resolve the trust issue. Whether there's a new exchange that comes up and they show total proof of reserves and liabilities on chain or something like that, that could be something that is brought forward in the next 12 months or hopefully sooner. That would be really bullish for the space, given the concerns at the moment. But there needs to be something crypto native that builds a narrative towards crypto is the place to be and the place to invest.
That's amazing. So for everybody in the chat, so what Ted is saying is, yes, Ted likes what we have to offer. Ted says, the idea of the Bitcoin halvening, the fact that we've dumped over a year, it is enough time to give us a good metric. It's a decent metric. And if we coupled that with potentially looser monetary policy restrictions, that could also be a potential catalyst too. But the question that Ted has is it really enough? And that's something that we all need to really figure out, I suppose. And that's what we're doing over the course of this bear market. We're trying to figure out how, where, and why the next bull market will be and will kick off so that we can be part of it. Ted, would you mind sharing your screen and maybe showing us a chart? Maybe show us what you're
Sure.
seeing in the maybe closer to near term. And if there's anything else you'd like to share, mate, it'd be really appreciated. I think you might have to
Yep.
turn off your camera.
Yeah, let's see how we go. The issues
Yeah,
earlier,
let's
so
for sure, for
let's
sure.
disable that and share my screen.
If any of you guys are enjoying the content, by the way, if you're new to the channel, please consider subscribing, bottom right hand corner, and like the video if you haven't already. Ted's going to show us some charting.
Cool. See my chart? Is that good,
Yeah, I
MJ?
can see it. I can see it.
Awesome. All right, let's start with the clean chart just to give you my thinking about that in relation to Bitcoin. So starting those that aren't too familiar with traditional markets, this is kind of my traditional markets. Kind of decoupled a little bit from crypto, and it's so a lot more often. NJ, you've probably shared this. I'm not 100% sure, but it's broken out considerably. It has broken through 2016 levels and even 2020 level when we had to the US dollar after the liquidity crisis that COVID caused. So a little bit thicker. Draw out those highs. NJ is a bit analysis, but
Apologies, everybody, for the. I know that there is a little bit of a mic hiccup. Ted,
how's
I
it
tell
now,
you what.
NJ?
Yeah, just I tell you what, we'll put the stream on pause just for a minute or two, and we'll sync up in the chat. So let's sync up in the chat. I'm going to pause this for a second. Apologies, everyone. Please do bear with us. Be patient for just a moment. We'll be back in just a sec. Hey everybody, sorry for that. I'm really, really sorry for that. The system is being a little flaky today, which is very unusual and very uncommon, but I do appreciate everybody's patience. What I'm going to do is I'm going to bring up TradingView myself, and we'll,
Yeah,
uh,
this
we'll work it.
backpacking setup
Yeah,
worked.
we'll work it that way. We'll work it that way.
Thank you.
Apologies for the mute. Apologies for the mute. So I'll share my screen. I need to find a clean Dixie chart. But you know what? Actually, while we're here, let me show you this and let me get your opinion on this. Then, Ted, this might be a shout. Hold on a second.
Yeah,
So,
shoot. What's wrong with your charts?
yeah, all right. So let me show you something. All right, let me show you something. So if we look at Dixie from a monthly standpoint, right, we can see here
Mm-hmm.
that there's a lot going on. Now, initially, I know that you mentioned this market structure level here, and you mentioned this small break in market structure here.
Yep.
Arguably, we can see that yes, the dollar is in a bull market. Now, if we start putting support and resistance and we start putting trend lines and whatnot, coupled with where we are in the market, this is what I have in terms of a picture. I have something like this. Now, what I've got here is and I'd love to get your opinion on this, especially if you disagree with it. If you disagree with it, that would be superb. All right.
Okay.
What I've got here is I've got a range. Okay. So I've taken the highs that the dollar made in the year, bear with me, apologies for that. I've taken the highs that the dollar made in the year 2001. All right. And that for me is where the dollar started breaking market structure to the downside right here at 106s. And then we started trending lower till we got to around the 70s level. And that's where I've taken my range level. All right. The mid range over here looks very choppy. It's exactly what I want to see for a mid range, very reactionary. And that's my
Just
range.
gonna get some water, NJ. Sorry,
Yeah,
one sec.
sure thing.
I'm listening. Got you in my
Sure,
ear.
sure thing, sure thing. Now, anyway, for those in the chat who might be familiar with this chart, what I've done here is I've marked out a channel. All right. Now, this channel has been operative for the last 20 years. All right. So if we go back, this channel here started in the year 2007. We are now in the year 2022, going into 2023. So not 20 years, but something like 15, 16 years. Now, the beautiful thing about this channel here is the respect that the Oi, I've got TradingView Pro, you cow. I've got trading. Yeah, I've got TradingView Pro. The beautiful thing about this channel here is you can use your basic TA concepts on it. You've got your deviations, you've got a mid-range right down the middle, you've got your trend line touches, you've got everything you sort of need. And when you couple it with higher time frame resistance and support, you can see what the dollar's doing. Now, my thesis, all right, and it might not be correct, my thesis is that we're going to see more distribution in this area here, okay? Something like this until maybe 2024, maybe mid 2023 even, and then we could start seeing something like this, and this area here could potentially signal the next bull market. One of the confluential tools that I'll personally be using for the next cycle. Not the be all and end all, but just a a confluential metric as an example. All right, something along those lines. And I do believe that if the dollar, maybe if we do something like this and we get to the bottom of the channel halfway through a bull market, maybe we could even see something like this before we get a push back up into the dollar. And the reason I say that is because we've got multiple tests at the top here. You've got 1, 2, 3, 4, 5. Now, usually on the fifth tap of a level, that's when you tend to get the breakout. But at the same time, you've got it here too, where you've got 1, 2, 3, 4. And if we come back down to the bottom of this channel, this would basically be the fifth test. And we wouldn't know if it's a deviation or not until it followed the plan. So looking at a chart of the dollar now, everybody's going to have a different opinion when it comes to this. But if I was to remove everything, what do you feel like your opinion is when looking at this chart? Because I know the dollar's in a bull market, but from a macro point of view, is what I'm saying lining up with macro, or do we need to look at more in order to understand something like this chart?
Yeah, I was afraid you're going to say a straight dip into the bottom of the trend line, but yeah, I think you've summed it up quite well. I have the same opinion. I think we push higher towards the start of 2023, so back up towards 110. I think is the next move, and I can't see it really dipping below 100 during that time. So if you tighten your stops a little bit on that, I think there's a bit of a long swing that we can play into the start of the year, unless we get something significant out of the next FOMC, PCE, and CPI data. So CPI and FOMC next week, and PCE a little bit later in the month. So those are three pretty important events. But I think most of the selling for the dollar index, and broaden that out to the VIX and other risk-off metrics that we typically look in the charts. I think most of that is quite overextended. So I think a pushback to 110 at least in the next month makes a lot of sense for Dixie DXY. That's where I'll be looking as well.
That lines up with what I'm thinking too. Now, for me, again, I think that 110 level is perfect. And the year of 2023 is going to be an awkward one. I think we are going to have highs and we are going to have lows. I do think that if, let's say, for instance, in the middle of 2023, if we saw the dollar breaking down, it would be difficult for me to argue that, say, for instance, if it did something like this, and then somewhere in February or March, it started doing something like this, I'm not sure that that would be enough for me to say, okay, we're back in bull market mode. I don't think that there would have been enough time. But I do think that some sort of distribution needs to take place in this area here. And distribution is something that a lot of people don't take into consideration. We're looking at the monthly chart for the dollar right now. Each candle for this chart constitutes an entire month. And I guess the question that we need to ask ourselves, while we have a macro guy with us, right, is what does a macro bottom look like? Now, for me, I've got multiple examples looking at this chart alone, what a macro bottom looks like. If I divert your attention over to the bottom areas here, we've got two areas that I've highlighted here. 1, 2, 3, 4, 5, 6 months, 7, 8. Okay, so on the 8th month, yes, we got the bullish retest and we started transitioning upwards. But essentially speaking, it was 8 months that we needed in order to form that macro bottom. Moving along over to the next area we've got right here. Now, this is continuation that we've got right here in the second ping box. We've got 1, 2, 3, 4, 5, 6 months of accumulation before we got sent. Now, the beautiful thing about this chart here is that the bulls, the smart money, would have got involved here. But many people who don't understand how charting works would have probably sold this area right here, not looking for that deviation. They would have panicked and said to themselves, oh, where this is probably going to go lower. We've broken out of this triangle to the downside. We've got one here already. And then the dollar would have started doing its thing anyway. Now, we've done the same thing here as well. If you guys pay attention to this too, I'll mark out this box here as well. Now, the reason I haven't marked this box out is because we did a deviation to the upside. This would have been very difficult to trade. But once again, if we count the candles, we've got 1, 2, 3, 4, 5, 6, 7. And on the 8th candle is where we get that retest again. Okay. Now, before we talk about the next potential bottom for the dollar, we've got to take consideration for the tops as well. Okay. Now, when looking at the tops, you can see here that they're very wicky. Okay. So you've got one here, you've got one there, you've got one there, you've got one there, and you've got one there. And the beautiful thing about this is that we never seem to be able to break the top of the channel. And if you guys mark this on your own charts, you'll see exactly what I mean. I can't seem to figure out why the top of this channel is so strong, but the bottom of this channel seems to continuously deviate. I could potentially move my trend line to fit my narrative, but I don't think I should do that. All right. Now, albeit, even though we've wicked at the top here, I do quite like this formation that we've got here. If I divert your attention to the middle of the screen, something like this to me would signal a macro top. Okay, and I'll show you guys this now before I let Ted talk. Bear with me. I think it's bars pattern. Here it is. So if we take something like this, I could see something like this unfolding before we break down. I could see something really, really like this. It lines up as well. Maybe we can tighten it a little bit just to make it look a bit cleaner. But I could see something like this unfolding right before the bull market. And you know what? What I like about this as well, I like the fact that it's forming a very bullish pattern here. This area here that we saw for the dollar previously was a very, very, very bullish pattern. And it's kind of a perfect bull market top, you know? Over here, the dollar maxis would have been at an all-time high. There would have been so many reasons for the dollar to go up. All the news that would have been coming out, all the macro news as well that would have been coming out, would have lined up with it perfectly. And I can see something like that happening for this area as well. Maybe not the exact same price action, but something along those lines in terms of distribution anyway, before we get that flip. Hold on, let me see if I can flip it. Bear with me. I can't seem to flip it, but yeah, I can't seem to flip it. But anyway, you guys know what I mean. So Ted, what do you think in terms of the dollar then? What comments do you have on the dollar to either support or maybe deny my theory?
No, I like your theory. I don't want it to be as prolonged as what you're drawing in that. That what have we got there? We got the. I'm going blank for the word fractal. Fractal. It's been a long time since I used that word. I think fractals are memes, but anyway. So back in 2017, when you had that rip into the top of the trend line after some distribution up there, like you're talking about, the narrative back then was the Fed moving towards tapering their QE program and hiking rates. So that was what was happening in 2017, and we already spoke about that briefly, but then they saw stress in the credit markets and they had to unwind that tapering program in what is now known as the tapering tantrum. So that's what happened, and that's what caused the top there. So they were shifting towards tighter policy, and that's what caused the move back up. And then at the top, a little bit of consolidation, and they announced that they were going to go back and and start stimulating the economy again, essentially. And that caused the market to go back down. So that is probably going to be a similar narrative to what we see this time around. It's just a matter of, like I said in the beginning, the data, the inflationary data, jobs market data, how the Fed can claw back as much credibility as they can and get inflation back down towards their target range of about 2% and keep the job market steady. If they can do that, and the data shows that, they'll start to be a lot more relaxed on their policy stance. Even recently, there's been dovish language creeping into their statements. So they're saying that although they think that the upper rate, the terminal rate of their policy is going to be much higher than previously expected, they're worried about doing too much. So if they start to do too much, then they're going to overshoot their inflation to the downside, and you'll start to see deflation in the US economy. And that's not what they want to see either. They want to maintain stable prices. So they could have already done too much because there's a bit of a lag between monetary policy and the actual impact on economic data. And it's around 8 to 12 months. So they started hiking in March. And what are we now? We're in December. So that's getting close to where we would start to see some impacts of that policy shift in the economy, but not quite yet. So we're yet to see the full effects of their hiking, particularly the unprecedented rapid rise of interest rates. So that is going to be reflected in the data at some point. And if it starts to show, wow, we've done way too much, the economy is stressed, they'll shift to, first of all, neutral rates, and then they'll have to start stimulating the economy to get inflation back up and get deflation out of the economy and start to see some stability in price. So it's just going to be an ever seesawing battle between the data and what it shows and how the Fed react. So only recently, like this environment that we see at the moment is so choppy because you get inflation data missing to the downside only a few weeks ago, but then you had strong jobs data. So with the dual mandate, the Fed have to uphold the jobs market, but they also have to keep prices stable. So, they're ever weighing up which side they're going to pay more attention to. At the moment, it's inflation. But when data comes in hot for the jobs market, the market starts to see that, oh my God, the economy is still strong, but inflation is coming lower. We don't really care about inflation, more the jobs market. So the market's very impulsive at the moment. And it's just that data needs to start flowing in one direction, like we did see with inflation data. It just kept going higher and higher and higher and higher, and all of a sudden the Fed had to go, we need to do something. And that's when the market shifted in November last year. We need to see inflation go lower, 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 and the jobs market maybe deteriorate a little bit, but stay quite steady month on month on month on month on month. And then the Fed will go, okay, we've done enough. We're starting to see the effects of our policy now. And that's when we'll see a much broader risk on shift. There'll probably be some consolidation for quite a while until they do flick the switch to stimulating. They might have to do stimulating straight away. It just depends how the data comes out. But I think right now we're seeing the makings of that distribution, like you're saying. But there'll still be some impulses higher in the dollar, impulses higher in yields as we see data being quite choppy through the first half of 2023. But towards the back half of 2023, I'm pretty convinced that we'll start to see deflation creep in and the Fed start to be like, maybe we've done too much. But
Okay, I've got an interesting question here. I was actually going to ask you why the dollar's been in a bull market for 20 years, but I'm going to move away from that. Now, in 2020, we had the COVID crisis, right? And the couple of FOMC sessions that we had from that COVID crisis were crazy. They were giving us minus 100 basis point decreases. It was insane, right?
yeah,
And when I look at that, when I look at those numbers and I look back at the bull market in hindsight, and I look at the BPS decreases that they gave us during those COVID event spikes, it makes me think, yeah, because they injected so much money into the market, That's why we had such a massive bull market, right? One that was bigger than 2020, 2017.
Yeah.
Now, if we, if we go to the latter stages of 2023, I still don't think that anything that these guys do will constitute any sort of maneuvers that they took in COVID in 2023. I don't think that we'll ever see a scenario again where the Fed have to, inject that much money into the open market, unless we had aliens or zombies or something obscure like that. So
Yeah.
now this is where it gets tricky for me, because from a TA perspective, I can see that if the channel is true, then that's one perspective. If I move over to Bitcoin, and I will do that in just a moment, um, I can give you the same arguments for Bitcoin as well. The TA is lining up perfectly with the dates, but I can't seem
Yeah.
to figure out what the Fed would need to do to get us to trend the way that we've trended in 2017 and to trend the way that we trended in 2021. Do you have
Yeah.
any ideas as to what could give us a proper risk on environment in the later stages of 2023? Or maybe Bitcoin finds its bottom in 2023, as in mid 2023. The dollar finds its top in 2023, the middle stages. But then what would we need to get the engine going? We've got the car now, we've got the fuel, we've got everything, that we've even got a destination. But what do we need to do to get the car switched on and driving?
Yeah. So first of all, I think you need to see um, real growth. So you need to see real growth in global economies. So at the moment, it's predicted to go a little bit backwards, particularly in the US and most developed nations. But if we can start to see economic output pick back up, and that will come through confidence that policy is starting to shift. So you can have, so when rates are going higher and when the Fed are talking hawkishly, it's often bearish for risk assets. In this environment, it's because they're having to calm 10% year on year inflation. But there's also times where they're starting to stabilize policy and everything is rosy and everything's fine. Inflation's down at their target levels and the job market is strong. And that's at times when you see real economic growth. So that is their goal, to maintain stable prices and to promote maximum employment. So if they can achieve that and have that sustained for some period of time, everyone will be happy to start spending their money because they know that nothing crazy is going to happen on the end. They're not going to have to pay more for their mortgage each month. They're not going to have to see rent skyrocketing or the price of food and cost of living going nuts, because that's where we are now. People are scared to spend money. So if we can get back to a more of an environment where things are calm, the Fed have more of a grip on what's happening with the US economy, and obviously around the world as well, we need central banks to unify and start to get on top of perhaps the mistakes that they've made in the last decade. And it seems they're trying to do that with a bit of a reset. So if they can reset everything, get inflation back to target levels, and then move towards a more plateaued, everything's okay, we're back to where we need to be. And then we could see a steady deflation from the unprecedented rate rise in the last 6 months, or 6 to 8 months. That is where they could start to say, all right, we need to go back to what we were doing before. We need to start stimulating the economy and making sure that that companies have money to spend and they can start promoting growth in the economy. So if we can move back towards that, people are going to be happy to spend money. Companies are going to start growing again. And you move back towards what we saw post 2008, after the GFC.
Okay, that's big what you're saying. So let me try and break this down for the community, just so that I'm going to try and explain it in more layman terms. So I think what Ted is saying is this: right now we all know that we're here, okay? And everywhere you look, you're going to look on Twitter, you're going to look on YouTube, you're going to follow your favorite influence, and there's going to be so many reasons why the dollar is going to keep going higher, and there's going to be so many reasons why Bitcoin is going to be going lower. Now, the question that I asked Ted was, given that at the beginning of the episode, he said that the confluencing factors that we've got here on the NJ show, it might not be enough to give us that bull market that we're looking for, but there are other things that we can add to it to help strengthen that concept, or at least give us more confluence at the very least, you know? So right now we're here. And what does that mean? From a charting perspective, I can say, yeah, we're at 105 and this is what the chart looks like. This is what the trend looks like. But we need to think outside the box a little bit. When I say we're here, it means that we are in a circumstance where people are struggling to heat their homes because the cost of energy is simply too much. People can't afford new cars because we can't afford it. And if we can't afford it, that's okay. We can get it on finance. But hold on a second, we can't get cars on finance anymore because the interest rates are way too high. You'd be paying absurd amounts on finance alone, which again makes it unaffordable. So now we can't afford heating in our homes, we can't afford cars. At least our rent is okay, but actually, hang on a second, our rent is not okay either. We can't afford rent. So when I say that we're here, it means that people can't afford anything, people are scared, and people don't want to spend their money. Now, to create a risk-on environment where you start seeing things like the S&P go bonkers, you start seeing Bitcoin go bonkers, maybe see gold go a little bit wild, maybe see the price of oil crash. In order to see something like that, in order to give us our TA plans that we've got, the Fed need to change that. The Fed need to give us reasons to spend our money. We need to be having conversations that say, oh, I saw this car the other day, man. I think I might switch up my motor. I think I might buy this car. Those are conversations that you won't really see nowadays. Oh, why don't we all go out as a family on Saturday night and go to a really nice restaurant? You're not going to see or hear those conversations right now because the economy, the market is pretty much dead. Nobody wants to spend any money, and the Fed have given us plenty of reasons not to. Now, what Ted is saying is that yes, the TA looks good, our confluential metrics look good too, but in order for us to start seeing them become a reality, we need to get the economy back in a position where we can start spending money in a happy fashion. Is that right? Am I on the right track here, Ted?
Yeah, nailed it. Yep. People need to be
Perfect.
happy to spend. And it's
Perfect.
very clear at the moment. Everyone knows no one wants to spend money. So, yeah,
Yeah, perfect.
simple as that.
Perfect. So if people don't want to spend money, then investing will be the last things on their mind. Because if we take investing as a concept, investing is something that requires time and patience. Now, when you're in a situation where you're desperate for money because you've got bills to pay at the end of the month, or at the end of the week in some particular situations, you're not really going to be focused on anything that requires time and patience. You're going to be more focused on what you can do to either make more money now or what you can do to at least save money because the rainy days are here. Is that correct?
Yeah, exactly. So you're
Which
seeing that just on that, NJ, while we're there. So post COVID, or I guess whenever you want to call that. So say the end of 2021, household savings were at all-time highs. And if you look at that now, that's seeing a steady decline as people dip into their savings, not for investing, not for renovating the house, but for living. So that is where we are at the moment. Until people can say, "Oh, I've got an extra $100 this week from I didn't spend it on my paycheck," I can start to invest that in whether they have an ETF portfolio or they have a crypto portfolio. They can start doing that. But at the moment, we're not at that point. So it marries pretty obviously that the markets are where they are.
I'd love to thank you for that, by the way, Ted. I'd love to move over to Bitcoin because I really like looking at things from a higher time frame. XO made me fall in love with looking at things really zoomed out, and it helps me so much. It allows me to live my day without really worrying about the price. I used to post charts I used to post 5, 6 charts a day, but now when I'm zooming out and I'm looking out, I know when to put my foot on the accelerator and when to chill out. Looking at Bitcoin, I've done the same thing. Rather than drawing a bazillion lines, I've taken a macro range, a macro high, a macro low, and I've built my story around that. So, yes, all of this price action, I'm not ignoring it, but I just feel like for the moment, for the time being, it's not as interesting or not as prevalent as it was in the past. So I'd like to run you through some of the things that I've got here, and I'd love to get your opinion on it too from a macro perspective. So looking at Bitcoin here, what I've done is I've marked out a range, which you'll see with the orange lines. So this is the range high, this orange line. This is the range low, and this is the mid range. And you'll see a level here as well in black, which is the 2017 all-time high for Bitcoin, which falls in at around $20,093. Call it $20,100. All right. Now, what I'm noticing from here is we've broken below that 2017 high, and it did take us a little while to do that. All right. This high here, it proved to be great support in the future. We can see here, it's hindsight for us now, but if we look back, we could see that this did prove to be a controversial area for Bitcoin. A lot of people thought that this all-time high would hold. A lot of people thought it would break. It looks like we have broken it, and it looks like we've broken back into a very, very old range for Bitcoin. Okay. Now, if I zoom in a little bit here, it starts to give us a bit more of an idea as to where I think price could be going. Not so much where the low is, but where I think price could be going. Now, the two levels that really stand out to me in terms of where price is going fall in at $14,500, and it falls in at roughly $11,300. All right. Now, I don't actually know if the price of Bitcoin is going to shank to 12,000 and then push up. I don't know if it's going to do that. Maybe if we look at the weekly time frame to give us a bit more of an indication as to what's going on. All I'm seeing here is bearish price action. Okay. Maybe we can get one shoot up here into 20K and then shoot down. I'm not sure. But for the time being, I can see two very, very clear levels: 14,500 and 11,300, potentially 12K. Now, do these levels match up with anything that you're looking at? Do you think Bitcoin could go lower? Do you think that the low could potentially be in? Do you think that some people are arguing that we might come and revisit the COVID lows of 3,000, 4,000. I'd love to get your opinion on what we're looking at here. And if you could add anything to it, that would be great for the community here and the audience here. By the way, thank you everyone for those who have tuned in. Remember to like the video and remember to subscribe if you haven't already. All right, bottom right hand corner, and get your comments in. I know you guys are listening intently. I know that Ted's saying a lot of deep things that require us to think a lot. But if you get a chance, throw a comment in. Let Ted know that you appreciate him coming on the show, especially if you want Ted to come back on the show again. We need to get the comments ramping. So keep it coming in. Keep it coming in. Ted, over to you, my friend.
Yeah, okay. So technical analysis wise, I would agree with what you've just drawn or what you have drawn previously, NJ. So you're looking at 11K roughly for an ultimate bottom, like a rounded retest of that breakout. So for me, technical analysis comes secondary to what I see fundamentally. So at the moment, it helps me pick the bullshit in rallies. So if we're rallying right now, we're probably just squeezing out over leveraged shorts rather than having genuine demand for Bitcoin, because at the moment, why would you want Bitcoin? You've got another 100 to 150 basis points worth of hikes. You've got the Fed still talking quite hawkishly. You've got institutional players blowing up. There's no fundamental reason to be betting on a bottom being in crypto at all at the moment. So while there could be a bottom formed already, there's nothing telling me that there's any reason for that to be the case. So looking at the charts, if we get down to 11K, that's probably going to come from some kind of event that we don't know about yet, whether that's another exchange blow up or that's what else could happen. At this point, I wouldn't be surprised with something crazy happening. So there's those cataclysmic black swan events that we seem to be getting quite a lot of black swans lately. So there's that event, but then there's also Fed or monetary policy related developments, which I don't think we'll see get too drastically out of hand to the hawkish side just yet. So I think worst case, we get a lot of sideways between here and say between 14 and 12K for quite some time. we get a lot of sideways, and then eventually, when we start to see what we're talking about already, maybe a deflationary narrative, the Fed moving towards neutral, we see a bit of a pump based on that narrative, but then it'll be short lived because the market will be like, hey, this is good, but where are we getting our next round of QE from? And that won't come until we said, like we've spoken about this already, that won't come until you see some deterioration in the economy or massive deflation, which we could get towards 2024, but I think that's a little while away yet. So TLDR, simply the TA, I think it looks sound, but for me, that comes secondary. I won't even jump on macro TA until I see a narrative shift. So for me, it's short the rallies down at the moment until you see the Fed shift and the data shift. So I like to look at that kind of front running the TA and spotting levels where I can see something forming, whereas most technical traders will wait for a close or wait for some kind of confirmation, which is good systematically. It's really good to do it that way. It works for a lot of people, but I like to jump in when I know that, hey, something has shifted here. At the moment, nothing has shifted significantly enough to say that a bottom is in, particularly in crypto. But as far as the COVID lows, that would be quite extreme. And I think maybe crypto would be over at that point.
Okay, all right, okay, very interesting. The I think the thing that I like the most about your comments there on Bitcoin was mainly that you stick by your macro love. You said it, and I loved it. We need more of that on this show. Um, you said, look, I appreciate the TA, but for me, it's always going to be fundamentals first, TA secondary, and that is the difference that you've brought onto this show today. And this is why I'm asking so many questions, and this is why I'm just showing you everything that I can. Now, um, I'm a big fan of market cycle theory. Market cycle theory isn't a real thing. I wouldn't say that somebody's gone and made a book or a video on it. It's something that I've learned as a CT
Yeah,
guy, right? But I love, love, love the market cycle theory where you've got a year of bull market, you've got a year of bear market, you've got a year of accumulation, and when everybody doesn't suspect it, you've got a year of bull market again. And I'd love to show this to you now, if that'd be all right with you. I'd love to show you how where I'm getting it from. So look, I'll
yeah,
give you an example. I'll
let's
give
do
you
it.
an example. I'll give you an example here, right? You've got you've got a year of bull market here. So if we take November 2020, right? That was when we were here. We've got a year of bull market like this. And right here, where I'm hovering my mouse towards the end of this box, that's November 2021, and an exact year of bear market right here as well. Okay, and it lines up pretty perfectly. Now, arguably, the next part of the cycle which I'd look for would be accumulation, forming that macro bottom. So I really believe that that could happen somewhere in this area here before we get the next bull market. Now, have we seen that before? Well, yes, we have. We've seen it in 2017 as well, where it's a little bit different because we had the COVID crisis that was event driven. That was a piece of price action that on a normal day wouldn't really be there. This is something that we probably won't see again. It's generational, that COVID crisis. So let's take it for what it is anyway. You've got a year of bull market. So if when was the top? So December 2017. So if I go to December 2016, right here, you've got a year of bull market. Then you've got a year of bear market. We start to see the macro low, okay? We start to see the macro low. Bear with me. Apologies for that. We start to see the macro low. We start pushing out of it. Okay. This is hold on. There we go. We start pushing out of it. And before we can even reclaim this level here to start our bull market, obviously we had the COVID crisis. And this is what I believe prolonged everything in terms of going back up. Now, even though we had that COVID crisis, this accumulation area, it's still held in bullish market structure, and we started pushing up, and that's why so many people got on board this area here. But in terms of this market cycle theory that I'm talking about, if we've had a year of bull, a year of bear, and now we're going into whatever we believe the accumulation should be or the macro bottom, is there any sort of big events that might be coming up over the course of the next 6 months that could cause us to potentially capitulate from here. Say for instance, if we got one stupid candle right into 12K from right here, is there anything that's currently in the market, from a dollar perspective, from an S&P perspective, from a Fed perspective, from an energy perspective, from a war perspective, that could make that happen, in your opinion?
Yeah, well, the one that stands out at the moment would be nuclear war. Um, that's the only real thing I could see at the moment. As far as monetary policy, no, I think we've heard most of what's happening there. Most of that has been thrown upon the market, and you had that initial massive leg lower led from that, and we've had FTX collapse. Finance, I don't, if there's another massive player that's critical to the space that blows up, we could see that, or nuclear war. But I'd like to say that the cataclysmic events for crypto are becoming fewer and with less potential. Um, yeah, there's nothing that's planned, I guess I would say, but there are always those very shocking and surprise events that can no doubt have a big impact, which, it could happen in the next minute, could happen a year from now, a couple of days. You just don't know.
Okay, that brings me on to my next question. So we've spent the better part of an hour talking about things that are rotating the market in a downward spiral. We've spoken about the monetary policies. We've spoken about the dollar and distribution for the dollar. We've spoken about um, different examples of as to why Bitcoin could potentially keep going lower. At the same time, we've spoken about potential bottoms for Bitcoin when it could come. Mid 2023 is becoming a very common perspective, if I'm very honest with you. I mean, I spoke to XO about this maybe 2 months ago, and my argument was still 2024. I thought the entirety of 2023 would be just shit, if I'm honest with you. I apologize for the language there, but that's how I see
Yeah,
it. But then, as of recent, because of the speed that this market has been collapsing, mid 2023 starts to look very plausible. Especially if we start breaking out that, not bull market, but more so the exit of the bear market, right? Where the market starts to give us relief, the market starts to give us signs that it's got a cushion below it, and anything that it dumps into will probably bounce back, and we can start aiming for higher prices. Now, if Bitcoin starts going up in a full risk on environment, then what's going to happen is, because Bitcoin's going up, because that environment exists at that time, altcoins are going to start getting some love too. And you're probably going to have what we are experienced in, a bull market, a full on blown bull market, where Bitcoin is going up because of certain circumstances, but the altcoin market is following through because Bitcoin is going up and the S&P is going up, and that risk on environment is there. Now, in 2017, Bitcoin reached an all-time high of $20,000, and in 2021, Bitcoin reached an all-time high of $69,000, almost $70,000. How high do you think Bitcoin could potentially go if we was to start pushing up? Let's say, for instance, and I know this is very speculative, so please don't feel obliged to put a stamp on anything. But let's say, for instance, as an example, we've seen the worst parts of the monetary policy. We've maybe nuclear war isn't going to break out. I'd love to say that it won't. I don't know. I think we're edging closer and closer to it. I think somebody's going to get trigger happy and just do it because nobody else is doing it. But fingers crossed, inshallah, that doesn't happen. But let's say that doesn't happen, and let's say, for instance, we finally get a breather, and inflation doesn't come down to 2%, but they manage to bring inflation down enough to give the market the relief it's looking for. And it starts off as relief, but then because we're in it for so long, it starts to give us time to push back up. How high do you think you could see Bitcoin go for that
yeah. So if I
next
think
stage?
about phases of that happening, so you're looking at a move to more of a neutral stance after maybe 4 to 5 months of data pointing towards that, and that could take us towards, say, we chop in between now and then, that could take us towards 30k. I think that initial push, maybe slightly lower, 28, which is almost a 2x from here, just under. And then eventually, once we get that full blown, we'll move up and then we'll come back down, retest, and if we get another bullish, or if that bullish narrative continues, into, hey, we've got deflation now, we've done way too much, that could move towards a shift towards 38k, I think, towards that previous floor that we had in, I think it was like March or February, somewhere up there. And then I think that's the next leg higher. And from there, it'll be looking like a dead cat bounce, and then we just need something else to push us through all-time highs, and that would be the ultimate trust, new narrative for crypto, some kind of adoption, some kind of big Tesla or Twitter or some big corporation adopting crypto in a real way to push it back to all-time highs, because I think it's going to be quite a task to push it back to all-time highs. But we need kind of that first initial move to neutral. We're starting to take the foot off the pedal with our hawkishness, with our tightening, into 28k or something like that, and then a dip lower, people taking profit, euphoria, all of that, back towards around 20k, and then the next leg higher, I think, would be quite parabolic on a deflationary narrative where you've got inflation data saying, hey, we're not seeing inflation rise month on month, we're seeing it actually decline month on month. And at that point, the Fed, when it gets to a certain point after months and months of that, they'll say, well, look, we might have to start stimulating the economy. And that's when you get the feedback loop of people starting to go, maybe it's a good time to invest, and the FOMO starts. Something like that, yeah. So that would take us through to about 2024, maybe a cycle end in 2025, if we see something like that.
I agree about 2025, 2024. I think 2025 would be, I think 2025 would be that phase again, if I'm honest with you, where everybody's making too much money and nobody realizes, and everybody think Bitcoin's never going to go down again, etc. I really think 2025 is going to be like that. So just another one. I know I'm conscious of time, I am, but just another one, because I'm really enjoying your thoughts here. This area here that you mentioned, right? For let me just bring it up. This area here that you mentioned, this 28k to 30k level. So if we was to tap that in 2023 as an example, right? That would be the catalysts behind that. Wouldn't be that we're going into a deflationary environment. Well, we are in a deflation. We are going into a deflation. It wouldn't be that we're going back into a bull market. It would be more so of a proper bear rally where the Fed says, all right, we've done, the worst is done now. We're not going to be doing any more bearish things. We're not going to be doing any bullish things, but we're sticking to neutral now. We're going to leave you guys alone. We're not going to bully you guys no more. Do you think that might be one of the catalysts that send us into a proper bear market rally of 30k potentially?
Yeah, definitely. I think that would be the instant point where you go, okay, time to put the foot on the gas and start to aim for 30k. At least that's my plan anyway. And I think that could come in the next 6 months, by mid 2023, maybe earlier. Just depends on how that data comes out. You've got scheduled data releases every month, so CPI, jobs data, PCE data. Those are the core to what the Fed do. So monitoring those between now and the future, you'll be able to see how that's shaping and how the trend is forming. At the moment, there's quite a choppy trend, like we spoke about earlier. But like I said, if we start to see a downside trend in inflation, and the jobs market stay quite solid or slightly lower, that's quite a good recipe for the Fed to start pulling the foot off the pedal with regards to their tightening regime.
Awesome. So, I mean, Brilliant episode, Ted. Really brilliant episode. We covered a lot of things there. So I'm going to go back to the original question that I had, right? It was the first question that I had after I asked you to introduce yourself, which was, you know, zooming out now. Maybe we won't put our tags next to our name. I'll just be Nas for the moment and you'll be Ted for the moment, as opposed to TED Talks Macro. Do you think there's going to be another bull market?
Yeah, well, I think zooming out and talking what we've just talked through, there's still definitely a use case for crypto. There's that high beta play allocation to portfolios, and those portfolios can get quite large, as we've seen creeping in 2021. Yes, that was an unprecedented time, but people have had a taste now, and regulation is going to come in. It's going to become a little bit safer and more transparent to play in. So that's going to eventually have more adoption as an investment grade asset class. So we need that to come through. We need more development there, and we need monetary policy to shift. If they can all do it at the same time, and the blocks can line up quite nicely, I think we can definitely have another bull run.
And I've just got two more, just two more. I've got one final question and then we'll wrap it up. I promise. It's just we don't get a lot of macro guys that come on the show. So when they do come on, I just bombard them nonstop.
Yeah,
In terms of the credit crisis, now a lot of people don't really understand the credit crisis and how pretty much the GLI chart, the Global Liquidity Index, that's the chart that people haven't been paying attention to, and that's the chart that's kind of been leading the market. The more that we've had issues with credit liquidity, the more the market has been going more into a risk off environment as opposed to risk on, and the more we've been seeing the dumps. What do you think? Do you know much about the credit crisis, and what do you think? Do you think that we'll see another period of time where you can go buy a car on 1 or 2% finance, or you can get a house on a 1% mortgage, or you can get a you can get credit easily? Like, say for instance, you're somebody with bad credit and you go to a tech store and you say, hi, I want to buy the latest MacBook Pro. I've got horrible credit, but I'd love to get it on finance with decent credit, like with decent interest, something like that. Do you think we'll see an environment like that again?
yeah. Well, it's all the feedback loops starting from monetary policy. So retail banks set their interest rates off of what the central banks of each economy are doing. So we need to see, again, it comes from the data coming through and how the Fed and how global central banks set their policy based off of that and what their intention is in leading the economy down. So are they looking towards lower inflation? Lower inflation? Are they looking towards stabilizing inflation because it's gone way too far too quickly to the downside? Or what are they doing? So that's how the economy reacts. Everything is reactive from how monetary policy is set. So, to answer your question, um, as far as a liquidity crisis, we've seen it in crypto where stressed balance sheets are having to sell assets to pay off liabilities and maintain equilibrium so they stay afloat. That happens in the everyday world. People right now, you'll see people selling their houses to fund their mortgage because they can't afford it anymore. And it's all just a feedback loop of one, inflation getting too high, the Fed having to react to that in tightening rates. And then the consumer at the end sees the flow through in all of a sudden their retail bank has to set rates higher because they're not getting cash as cheaply as what they were. So they have to make up for that rate in what they sell to the consumer, and the consumer has to pay that rate. So if they can't pay that rate, they have to start selling assets. Asset prices spiral lower, and it's just a never ending feedback loop of prices moving lower until we see all of the stress moved out of the market and we start to bottom. And like we've spoken about, people are happier to start spending money because they're in a better position um, financially. And that's, you can look at it on an individual consumer level. You can look at it as a business, as a bank, as an economy. It's all relevant. It just gets more complex as you go through the ranks.
So, like, not to be cheeky, but market cycle theory, innit? I'll
Isn't
explain.
it?
Yeah, because look, you said feedback loop, right? I love that.
Yeah.
I love that. Look, you don't need to be a genius. You just
No,
need
you
to
don't.
understand the loops. Look, when credit is high, when interest rates are high, don't buy. Not good investment. When
Yeah.
everything is low, when everybody tops out and they have to sell at the bottom, you buy the bottom and then ride the wave back up. Sell the top, ride the wave lower, ride the wave back up, ride the until we
Yeah.
have something new. So in the 1990s, we had the dot-com bubble where anybody who made a business, anyone who jumps on the internet and makes a business with the keyword e-commerce, you're making money. You could start a toilet paper business back in the 90s and you'd be like some super big millionaire right now because you capitalized on that period of time. And then now we've got Bitcoin and cryptocurrency, and people don't really care about Bitcoin, bro. Only people who care about macro care about Bitcoin. People care about gains. They just want to make enough dollars or pounds or euros so that they can buy their houses, their cars, they can live a better life, an easier life. So, I'm really, I really like everything that you said, bro. I really like everything that you said. Final question before we let Ted
Appreciate it.
go, and this is a question I ask every guest that come on the show, and you're an important guest that I need to ask this question too, because for me personally, I've absolutely loved my time with you. Will you be back on the NJ show?
Yeah, mate. I'll be back on as long as you invite
Hard,
me. I'll
hard.
I'll make time. I've enjoyed our chat today, so it's been awesome. Thanks for having me on.
Amazing, amazing,
We should definitely do it
amazing.
again.
We will definitely be doing this again, and I can't wait to see what you have to say in the next bull market. That's going to be really good, you know. But Ted,
Yeah,
look,
yeah,
thank you
yeah, yeah.
very much. Thank you very much for your time, for your patience, for coming on the show and talking to the community and sharing some of your thoughts. I'm looking forward to our next chat, my bro.
Yeah, me too. Thanks,
Yeah,
NJ.
take care of yourself.
You
I know
too.
you've got your own YouTube channel, so everybody make
Yep.
sure if you're following me over on Twitter, you'll see TED Talks Macro in the most recent posts. Make sure you click on his profile. He's got his YouTube in his profile there as well. Really outstanding content, and that's the reason I brought Ted on today for you guys, so that you guys could benefit from it. Ted, thank you very much. Have a lovely day. Have a lovely week. Have a lovely weekend. I will speak to you really soon. All right.
Perfect, NJ. Thanks for having me on, and thanks, guys, for tuning in.
Cheers. Appreciated. Well, everyone, that is your hour with TED Talks Macro. Now, it was a very interesting conversation. Now, when we bring on macro guys on the show, you guys know yourself, they have a very different view and a very different take on the market. They approach the market very differently to TA guys. And in the past, I never used to understand what the importance of macro was. I started in crypto, I focused on FA. Oh, this project has news coming out. Oh, yeah, this crypto, they've got mainnet. This crypto has staking coming. Oh, this one's going to partner up with this one and they're going to partner up to be some big giant, and that's where the pump's going to come from. I never really understood it from a wider, more broader perspective, and bringing macro guys on the show help us look at it that way. We'll look at it in TA. We'll say, all right, we've got Bitcoin here. Let's chart Bitcoin. I foresee the low being at here, and I see that, and I see that. But then the macro guy or girl will come and say, well, hang on, NJ. Yes, in in an ideal world, this is the low that we want to see hold, and this is the mid that we want to see hold, and this is the high that we want to see hold. But these are the building blocks that we need for your speculative idea to become realistic. Okay. And what I've been doing over the last couple of months, because I know crypto is becoming boring now. I know that you guys and girls are wondering, why is NJ not streaming? I fully understand all of that. And it's exactly what we anticipated. This is exactly what we said we wanted. We said we wanted the accumulation period to come. We said we wanted the low to come as soon as possible so that we could transition into the next bull market. And I really flipping believe that we're doing it. I really believe that we're doing it. For me personally, everything that I wanted to happen is currently happening. And if we can capitalize on the trend that's coming on next, well, you guys know yourself. You've seen it before. Inshallah, we'll see it again. I really hope you guys and girls enjoyed this episode. Make sure you smash a like on the video. Make sure you hit the subscribe button if you haven't already. If you're new, welcome to the NJ community. Really happy to have you on board. We are going to absolutely crush this next bull market. We are absolutely going to crush it. Whether it's the next one, the last one, whatever it is, I really think we are going to have one. And we'll find out if I'm right or not. Okay. See you on the next episode, everyone. Cheers. Goodbye. Catch you whenever the next episode's going to be. Love you all. Take care. Love, 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 love.